Do you know that you can pay money and have zero expense, or have an expense without paying anything? Let's break it down. Hello, I'm Danny A from Accounting 123, and today we're gonna explain the difference between expense and payment, the number one confusion in business. What is expense? Expense is the value consumed. Then what is payment? Payment is the cash movement. Remember, they are not the same thing. If accounting ever feel confusing or complicated, it's not you, it's bad explanations. And today our mission is to fix the confusion. We are fixing one of the biggest misunderstandings in business. We also will explain what is the difference between expense and payment, two concepts that confuse even experienced entrepreneurs. We'll bring real clarity, simple explanations that actually make sense. Let's go. Remember this golden rule. Payment. This is cash movement. Money leaving your bank account right now. And expense. Value consumption. When you actually use the benefit or service. The key insight. These are two different events. Money moving and value being consumed happened at different times. Accounting reality. The system cares about when value is consumed, not when money moves. Why it matters? Business performance equals reality. Understanding when value is consumed reveals your true business health. Not bank balance mood swings. Your checking account balance doesn't tell the full history. This helps you make real decisions. Make informed choices based on actual business performance, not cash flow timing. How you gonna understand this? It's better with one example. Our first example for today. On January 1st, you pay 1,200 US dollars for 12 months of rent. Your bank account cries. The question, is that a 1,200 expense in January? No, it's a 1,200 US dollars payment. Here the answer. Why is like that? You have $100 monthly expenses. That's what you actually spend each month. You cover 12 months. Your one payment in January covers a full year. Why? You consume the office space monthly. The benefit is used over time. Accounting asks, when do you use the benefit? This is accrual accounting, standard system used by real business worldwide to track performance accurately. It matches reality. Record expenses when value is consumed and not when cash moves. Helps you make smart decisions. Gives you the true picture of your business operations. Let's make it more clear with example number 2. In December, you have electricity bill for 200 US dollars. But you pay it in January. Let's break it down. Did you use electricity in December? Yes. The electricity powered your business operation throughout December. The service was consumed. In December, the result is you have expense. Did money leave your account? No. The bill hasn't been paid yet. The cash is still in your bank account. So what do we have as a result in December? No payment yet. This is called an accrued expense. Expense follows usage. The cost is recognized when the service is consumed, not when paid. Payment follows cash timing. Money leaves your account when you actually make the payment. Common mistake. Most beginners look at their bank balance and think, money went out, I made a loss. But this is wrong. This thinking confuses cash flow with profitability. You must separate when expenses occur from when payments happen. Another common mistake. No money went out, I am profitable. Also wrong. Just because cash hasn't left doesn't mean you don't have expenses. Accrued expenses still count against your profit. This calls two different universes. Profit universe, based on expenses when services are used and revenues is earned. And the liquidity universe, based on payments when money actually moves in and out of your account. This operates independently but simultaneously in your business. Warning. Mix them up and your decisions become emotional instead of strategic. Confusing profit with cash flow leads to poor business decisions. You might think you're profitable when you are actually running out of cash or vice versa. Let's make it more clear with this visual formula. Revenue minus expense, this is your profit. Accrual accounting shows true business performance. Cash in minus cash out, this is your cash flow. Cash accounting shows liquidity position. Profit doesn't equal cash flow. They are not the same thing. And the shocking truth. Profitable companies can still go bankrupt. A business can show strong profits on paper while running out of cash. Without proper cash flow management, even profitable companies fail. The flip side. Some companies look poor but are actually doing great. Smart businesses with negative cash flow might be investing heavily in growth. The key is understanding the difference between temporary cash crunches and fundamental profitability problems. So, quiz time. Let's see if you're smarter than 80% of small business owners. Question number 1. The scenario. You buy a 3,000 US dollars laptop and pay immediately in cash, and the vendor delivers it today. Is this? Answer A. Expense. The full 3,000 US dollars hits your P&L immediately. P&L is short for profit and loss. Or answer B. Payment. You paid cash, but it's an asset you use over time. Or answer C. Both. It's recorded as both an expense and a payment. Take your time and choose your answer. And the answer is answer B. It's a payment. When you buy equipment with cash, it's a payment that creates an asset. The laptop isn't a full expense yet. It will depreciate over time. And we will speak about depreciation in our next lessons. Stay tuned about them. Let's go to question 2. The scenario. You receive a 500 US dollars marketing invoice for work completed this month, but you decide that you pay the bill next month. Today, is this A. Expense, B. Payment, C. Both, D. Neither? Take your time and think about it and choose your answer. Are you ready to see the answer? It's answer A. Expense. The work was done this month, so it's an expense now. The payment happens later, but the expense is recorded today. Did you get it right? Let's move to the third question. The scenario. You pay 1,200 US dollars for insurance covering the next 12 months. Today is month 1. In month 1, your expenses. Answer A, 1,200 US dollars. Or answer B, 100 US dollars. Or answer C, $0. Take your time and think about it. And the answer is answer B, 100 US dollars. Why? You paid 1,200 US dollars up front, but only 100 US dollars belong to month 1. The rest is prepaid insurance, not yet expensed. Did you get it right? If you answer these questions correctly, you understand accounting better than most entrepreneurs. You know the difference between cash and accrual payments and expenses, and how to match costs to the right period. That's the foundation of clean bookkeeping. Now you can spot mistakes before they become problems. Well done. You can use this tomorrow morning. Open your bank transaction for this month. Separate payments into expenses, assets, prepaid costs. Now you will see your real monthly profit. One sentence to remember from the whole presentation. Payment moves cash, expense measures reality. This is accounting 123. Simple, clear, no drama. Want more accounting clarity? We use no jargon. We skip the textbook language and speak in plain English. No confusion. Each concept builds on the last, step by step. You can download the quick guide cheat sheet. You can find the link in the description. I'm Danny A from Accounting 123. Accounting explained for real people. Coming up next, revenue versus income. The mistake that makes businesses think they are growing when they are not.